Greetings to everyone. I hope we are all fine. And welcome back here to Raco Media as we are preparing for the taxation exams, which is just 1 week away from now, right? I decided to drop the solution for tutorial session 7. I really wanted to continue again because I'm literally tired, but for the love of the game. Please, can you use this opportunity to like this video and also subscribe to the channel if you are new here? Right, before I begin, I just want to spend 3 minutes of your time, right, to help promote a friend. A friend is one of our mates, right? He's one of our mates. And then he has composed a nice track. The track debut, like it may be. See. I know, say we are here for business, but please, just if you won't do anything, but just go and then just like the track for me. Okay? When you go, just like the track for me, right? When you go, just like the track for me. So this is the track, right? Kwesi Prince. The title is Jenny. Boy, this track really they talk about me. This track really they talk about me. Like, you go the things say the track no nice, so but relax. Make like you go the things say the track no they be but relax, make you put this thing inside. You go see you see the composure. Boy, you see the composure, the boy be good.
I remember all the things that we see that have been through the tryout.
Ah, when I remember the pains me, Kofi, I've been through, even as at now, boy.
The time I had to lay those shoes. So the day I'm trying me say more here the same about God help show the way. Then you saw me. I can't that's searching the bomb with the ground. All I see now is laugh time.
So just search Christy Prince Jenny on audio mark and then like this for me. Let me I think I've not logged in. Let me log in again. Like I said you. Hey, see good dear. Oh, yeah, it's a yes thing for that.
About help then you saw me. I can't that's searching the bomb with the ground. All I see now is laugh time. More so.
Kindly play it for me, okay.
Other guys because all that they do that what they live. All this saying, all this life had no option. Life was tight. All those battles I had to fight. Life was blind, no place sight. Only darkness and no light. No power and no might. Everything new.
All those fights, all those struggles I need to fight. Boy. The boy be good. The boy be good. Big. Kindly listen and then like the track for me, okay? All right, let's get back to business. Yeah. All right. So let's begin with question one. The Pioneer Products Limited, PPA, question 1A. Pioneer Products Limited, PPL, is a manufacturer of plastic products which are supplied to both domestic and foreign markets. So their sales for that year is this 2.35 million. Export supplies, export sales supplied to the President of Ghana for maintenance work, import duties paid, import VAT paid, cost of local purchase excluding VAT, cost of electricity paid including VAT, then VAT paid to the Ghana Revenue Authority during the year, and levies paid to the Ghana Revenue Authority during the year. We are asked to compute VAT and levies payable at the end of the year 2023. All right. All right. So now this is this turnover that was there. Out of this turnover, we had export sales, which is tax exempt, which is VAT exempt, and then also supply to the president, which is VAT exempt. So we take both of them out of the turnover, and there is what we get. Now we first compute the NHI or get fund and then COVID levy, right? So we compute them out of it, where we are going to get 25% of this. We compute it and then add it, sorry, where we get 25% of this, 2.5% of this is what we are going to get. 2.5% of this, we are going to get this, and then 1% we are going to get it. So in all, when we add all of them, we are going to get this amount, right? 1,869,288 Ghana cedi. Now, when we charge our VAT, our output VAT on it, right, which is the normal 12.5%, this is what we get as our output VAT. Okay, now we want to determine the input VAT that was paid, right? The input VAT tax paid. So input VAT, the VAT paid on import was 43,100, right? So the import VAT paid is what? 43,100. Then VAT paid on local expenses is going to be, the expenses is what? 17,100. And then it was excluding VAT. So the VAT that was paid on it is going to be 12.5%, right? If it was to be including VAT, then it is going to be 12.5 over 112.5, right? But since it is excluded, then this is how it is going to be calculated. Then VAT on electricity. Electricity was what? Was VAT inclusive, right? On electricity was VAT inclusive here, right? So we calculate 12.5 over 1125 times the electricity amount. This is the VAT we paid on that. Now, when we add or we are going to get our input VAT. So amount of VAT payable, as you know, is the output VAT minus the input VAT. So our output VAT was calculated here. And then our input VAT has been calculated here. Then we subtract it, we less them, and then we get our VAT payable to be 156,401.28. Now, we've paid some VAT already, right? So we paid some VAT already. VAT paid to the Ghana Revenue Authority during the year is this 15,900. We less it, and then we get our amount of VAT outstanding, which is 14,000. The 140,501.28. Now we come to the levies too. The levies too, this was the levies that was charged. Just the levies charge was here, right? The levies charge was here. And then we've paid some of the levies already, right? We've paid some of the levies already. 3200 or 3,200 here. We less it, and then this is what amount of levies outstanding, right? That you are supposed to pay. And in class, so far in class, it is only question 1A that we've done. The rest, we've not done it. So I'm just going to do them here as a bonus. So, okay, we did question 1A and then B. So question 1B is saying that state 5 conditions under which goods supply on a sales return basis become taxable, right? Where goods that has been supplied and is being returned is still taxable, right? So we have here the date when the purchaser chooses to keep the goods, right? So when, let's say, someone comes to buy the goods and then it is more than 1 year and the person is returning it, in a normal circumstance, it is still taxable, right? And then the issue of tax invoice by the seller, where you've issued tax invoice already, is taxable. The receipt of payment by the seller other than a deposit. And then when the expiry period within which the customer may return the goods. So when maybe the goods is being given some period to return the goods and be payable, and then that time has passed, then that supply becomes taxable. And then when it is 12 months after the date of dispatch by the seller. So if in anything you sell something to someone and it is more than 1 year, it is taxable. That particular good becomes taxable. So you assume that you sold it and then sold it for revenue fully. Now, computation of pension. Ama Adakulu retired in December 2022 after contributing to SNIT for 300 months, working with 3 different employees. The last 5 years of her annual salary are as follows. Compute the monthly pension payable to Ama Adakulu. So basically, the TA said that this is not work consumption, but I'm just treating this as a bonus. He said, we don't need this at our level, but I'm treating this as a bonus. So, on a normal note, before they will calculate your pension payable, they will select your best 3 months salaries. So best 3 months here is this, and then this, and then they will average it. So it is going to be 250,000. I'm just removing 3 zeros, plus 450,000 plus 500 all over 3. All right. And then your first your first 180 months. So when we do this, we are going to get 250 plus 450 plus 500 divided by 3. You are going to get 400. 400 divided by 3 is going to be so 13. When we bring the 3 zeros back, 13, okay, no, it's going to be 13,333, right? It's going to be 13,333. Right. So now, when you work your first 18 months, you are going to be getting 37, let's see, 18, 180 months, sorry. So the first 180 months, you see the total worked months here is 300, right? Your first 180 months will attract a 37.5% pension, and anything above that is going to get 0.93. How much was it? 0.9375 or so. 0.9375 here. So now it will be left with 120 here to make it 300, right? So that one is going to be multiplied by 120 times 0.09375. So any amount that you get, you add it to the 37.5. So it is going to be 120 times 0.9375. 0.09375. And you're going to get 11.25. So that 11.25 will be added to this, making 48.75 in total, right? So you are going to get 48.75 of this total money here as your annual pension. When divided by 12, you are going to get it monthly, right? So that is it. Let's look at the solution. I just wanted to do an overview so now we take the best 3 years. The best 3 years, then we average it, right? So, oh, I didn't calculate the average well. Didn't calculate the average well in the previous listing. Why? Yes, divided by 3. I use different things. So 250 plus 450 plus 500 divided by 3. Yes, supposed to be 400. Sorry, supposed to be 400. So you find the average of that. Then the pension, the minimum right is after you've worked for 180 months is 37.5. Anything above that will be multiplied by 0.9375 and you get this. Now you are getting 48.75 in total, right? So Ahmad Akulu worked for 25 years and retired at age 60. There is no retirement reduction factor. This factor would have been necessary if he retired between the ages of 55 and below 60. So now the annual pension is going to be the 48.75% times the 400,000. He gets this. This will be the annual pension salary. Now the monthly pension pay is going to be this one divided by 12. Then we get a monthly pension pay of what? 16,250. Right. So this is simple and then straightforward. Let's go to question 2. Despite the turnover rule stated under Section 6 of the Value Added Tax Act 2013, Act 870, there are certain exceptions to turnover rules over Section 11 of the same Act. Now, they said we should explain the exception to turnover rules under Section 11 of the Value Added Tax. So, this is the exceptions. So, the exceptions to turnover rules is a promoter of a public entertainment, an auction, a national, regional, local, or authority or body which carries on any taxable activity shall apply for registration. So the registration of the above persons or entities occurs as follows. A promoter of public entertainment shall apply for registration at least 48 hours before the commencement of public entertainment. If within any period of 12 or less months, that includes the date of the public entertainment to which the application relates. The total value of taxable supplies of the promoter or license or promoter is reasonably expected to exceed 10,000 Ghana cedi. Then for the auctioneer, auctioneer shall apply for registration within 30 days after the date on which the person becomes an auctioneer. Then the national, regional, local, or other authority body shall apply for registration within 30 days after the date the national, regional, local, or other authority or body commences a taxable activity. So for this particular tutorials, it's on VAT and then pensions and this kind of stuff. But our TSA pension is not at our level, right? And we know how to compute VAT already, right? You first find if you want to get output VAT, you find the distance on your sales, right? That's the output, and then input is on your purchases, right? And then for output VAT, you are going to charge levies on it. You are going to remove levies too, and then for input, you are only going to remove the VAT pay, right? So that is basically the foundation of this. If you get that, I think this tutorial set 7 set, you don't even need it. So B is saying that application for a voluntary VAT registration may be denied the opportunity to an application may be denying the opportunity to register for VAT. Although the Value Added Tax Act 2013 makes provision for voluntary registration, state a condition under which application of voluntary VAT may be denied when the person is not keeping proper records and those kind of stuff. Uh, so the conditions are the person has no fixed place of abode. The person doesn't have a fixed place of business, or when the place of business is not known, then the person will, when the person is not keeping proper accounting records relating to any business activity carried on by that person, and also when the person will not submit, or when the person does not submit regular and reliable tax returns as required under the Act, and when the person is not a fit and proper person to be registered. Now, C, Atakura Manufacturing Limited is a company at Winneba that manufactures roofing sheets. The company has recently registered for VAT and it's unsure about the treatment of its input VAT paid before registration. The company has sought your guidance on treating input VAT paid before registration. So here, so we should advise the company on the deductibility rule of input VAT incurred by a company before VAT registration. And here's it here. So the section 4812 of the Act 2013, Act 870 as amended, and Regulations 48 states that a taxable person may recover VAT on stock and capital purchased or imported prior to registration, provided that goods are still in ownership and in possession of the taxable person. And in the case of stock, the purchase or import occurred not more than 4 months prior to the date of registration. And in the case of capital goods, the purchase or import incurred not more than 6 months prior to the date. And the taxable person is in possession of a tax invoice or relevant custom entries, and also the taxable person produces an inventory of all goods on hand on the effective date of registration. Then the person claims for recovery of VAT shall be submitted in prescribed form. Now let's look at G. Explain the three-tier scheme under the national pensioners. This one there, I'm sure it might come, or maybe it might come. Oh, pension. They say pension is not, but maybe. So the three-tier pension scheme is the new pension scheme that was introduced in the country following the promulgation of the National Pension Act 2008, Act 766. The Act is for both the public and private sector. So tier one is a mandatory basic um, national security scheme regulated by the National Pension Regulatory Authority. It is defined as a benefit scheme. Then tier two is also regulatory. Tier two is also regulated by the National Pension Regulatory Authority and is a mandatory, fully funded and private managed occupation pension scheme. It is defined as a contribution scheme. Note that out of 18.5% compulsory contribution made by the employee, 5.5% and the employer 13%. 2.5% is paid as premium towards the NHIL, and 11% is paid to Senate as tier one towards the monthly pension of the retired employee at the age of 55 years. That's reduced pension or 60 years full pension. The remaining 5% is paid to the fund manager of the employer or employee choice towards the lump sum pension as tier two. Other benefits paid include survivors benefits, invalidity and immigration benefits. The medical board set up by Senate Tier 1 in collaboration with Ministry of Health Tier 2 is to verify the invalidity. So that's to qualify for withdrawal for both Tier 1 and Tier 2 pensions. Applicants might have contributed for at least 15 years, which is 180 months, and attain an age of 55 years. Maximum contribution, a maximum amount will be determined by Senate in consultation with the NPRA periodically. Currently, 2023, the maximum contribution on a monthly salary is 42,000. Initially, it was 35,000. Entry age, new minimum is from 15 years, and the maximum is 45 years. Age exemption, those who were 55 years and above before the commencement of the Act were exempt from this new scheme. On the other hand, a person who is 55 years and above exempted from the Act may opt to join the scheme. So, tier three, a voluntary funded and privately managed provident fund and a personal pension scheme also regulated by the NPRA. The amounts to be contributed by the employee and or the employer is not fixed. However, to qualify as a belief, the total amount contributed by the employee and employer should not exceed 16.5% of the employee's basic salary. Withdrawal can be done by the employee after 10 years. Otherwise, 15% tax will have to be paid on both principal and interest withdrawn. And let's talk about percentage. State five circumstances under which the Commissioner General may cancel VAT registration of a VAT taxable person. And this is what we just said here, when the person is not having a fixed place of abode and those kind of stuff. So when the person no longer exists, right, and is not carrying on a taxable activity, is not required or entitled to apply for the registration, has no fixed place of business or abode, has not kept proper accounting records, has not submitted regular and reliable tax returns. When the taxable person turnover falls below the registration threshold, and when control and verification tax are the result to comment registration action, the registration action. So B is saying that state three situations under which a taxpayer cannot claim an input tax. Remember, he said something just some reasonable. So when the input tax is on exempt supplies, right? And when a previously taken input VAT, so VAT inputs cannot be taken more than once. When you've taken input VAT already, and items meant for personal use other than business, you won't be able to take input VAT on it. Then input tax can be claimed only at the rate paid. That is 3% to 12.5%. The non-VAT invoices and unapproved invoices too are not claimable. Input tax in respect of entertainment, including restaurants, meals, and hotel expenses, unless a person is in the business of providing entertainment, right? So these are the one input, but that are more than 6 months. 6 months is for fixed assets, right? And the other one is 4 months. Then we have other ones too here. You can go through it. They say they need three. We've specified a lot. All right, so let's look at C. C is saying that Kingsley Atakra is a postpaid customer of MTN Ghana. He receives his July 2022 bill from MTN Limited amounting to 3121, inclusive of all taxes and levies. He's worried about the amount charged for his telephone usage for the month and wants to know the tax composition in the charge, right? So now what we need to do is we need to calculate for VAT, we need to calculate for NHIL and those. So we are coming to reverse everything. So you know that VAT is 12.5%, not the current one, but in the case of exams or in the case of this tutorials, right? 12.5%. This one is 2.5%, 2.5%, 1%, and communication service tax is 5%. Come to a minute. So now we first calculate for the VAT because we are reversing everything. If the thing was on purchase and we are trying to know the output VAT, then we have to calculate this ones first before we apply the VAT, but we are reversing. So we start from the VAT. So we start from the VAT. When we calculate the VAT is 12.5%, and they were all inclusive. So it will be 12.5 over 112.5. Then this is what we are going to get. This is the amount supplied, right? So we calculate it on it, and this is what we get. Now we have to less the VAT from this one so that we can calculate our NHIL and the rest. So now it is going to be the amount supply minus the VAT times. Remember, these are all charged at once. So they are all inclusive here. That's why we have 111 here. So it is 2.5 plus 2.5 plus 1 plus 5. That's why we are having 11. So it will be over that 111. So for example, this plus this plus this plus this is going to give us 11. All right, so 11 plus 100 is going to give us 111. Right, that's why we are doing it this way. So this amount supplied minus the VAT times 2.5, which is the NHIL over 111, and this is what we get. Then the get fund. The get fund levy, right, is also applied the same way we get this. COVID levy is 1%, apply the same way we get this. And then the communication service tax is 5%. We apply and then we get this. So the amount, the total VAT levies is this one. So if in case the person should have, so we add all the amounts and VAT. So this plus this plus this plus this plus this, and we get this. So if in case they should have asked us the actual amount charged, we are supposed to subtract the supply from it, and then this is the actual amount that was charged as communication supply, right? If we remove all the VAT from it. Yeah. So this would have been the amount, right? So now we move on to the D part. Explain the basis for calculating pension benefits under the National Pension Act. So remember, I said that they are going to take the best three average and the best three salaries of the person and they will average it, right? When they average it, they look at the months that the person has worked. If the person has worked 180 months, it attracts an annual discount of 37.5%. Any other extension is going to be any other month in addition is going to be multiplied by 0.09375, then added to the 37.5, right? So that is it for this one. Question 4. According to Section 38 of the Valued Added Tax 2013, the minister may, by legislative instruments, make regulations to grant relief from tax on taxable imports of goods or service or taxable supply of goods acquired in the country to the person specified in the third schedule. State 4 conditions that must be satisfied by VAT registered manufacturing companies before they are granted upfront relief of VAT and levies on imported raw material. So VAT manufacturers importing raw materials, this relief is subject to the condition that the manufacturer is a member in good standing of the Association of Ghana Industries. The manufacturer has submitted all previous taxable returns and paid the tax, penalties, and interest from previous tax period, if any. The Commissioner General is satisfied that the manufacturer has met the conditions above and has listed the manufacturer in a register published by the Commissioner General with a validity period of 12 months, effective from 1st January of each year. And the imported raw material will be applied solely and exclusively for the manufacturing operation of the relief beneficiary. Then you'll have an input-output ratio of a minimum of 20%, except where import level is 100,000 or more in a year. And also, they should belong to the sub-manufacturing categories: textiles, food, drugs and tobacco, toiletries, cosmetics, energy, leather, rubber, plastics, and the likes. So the activity that do not constitute supply of goods. So supply of goods does not include supply of money. The transfer of goods to a person acting in a representative capacity to transfer to the transferor is not a supply of goods, right? So this is it for the B. The B was asking activity that do not constitute supply of goods and service under the Act. Now, This is Mr. John Rumenski, and we have to calculate his pension. His assume he retired under the Pension National Act. Compute his pension benefits and his monthly pension pay, right? So remember, we take the best three and then we average it. Now he has worked for 300 months. So the first 180 months will attract what? 37.5%. The 120 month that is left will multiply by 0.09375. Then we add it to the 37.95, the 37.5%. Then we get a total of something, right? And then we multiply by the average and then we get the annual one. We divide it by 12 and then we get the monthly one. So it is easy. So that's what's here. Average, get this. Now, this is the minimum pension right. And then now this is the extension here. That's okay. Now, when we multiply it by 8, we are going to get what? 46,800. Then his monthly is going to be 3,900. So simple. Condition for question 5 is asking for condition for advise the company on sales condition they must be satisfied before the GRL may fund the excess VAT input to the company under the value added tax. So you're a student of taxation at ABE Tax Education Institute. You have been contacted for tax advice by a complete food processing Ghana Limited. The company produces various kinds of fruit juice for both local and foreign markets. The finance director recently learned that the company can apply for VAT refund from the Ghana Revenue Authority and has approached you for your advice. Now, we know this that the VAT paid should qualify as a deductible input VAT. That's when there can be a VAT refund, and then provides all necessary records to support the VAT application if for the refund application. The business must have submitted returns for all months for which it has been in operation. The company qualifies for refund of VAT where the excess VAT is attributed to exports. The company exports exceed 25% of the total supplies within the tax period. Then the total exports proceeds of the company have been repatriated to the company's authorized bank accounts in Ghana. The company may take the application for refund where the excess VAT has been outstanding for a continuous period of 3 months. So this is what the law is saying. Period of 3 months or more, where the Commissioner General may order an audit of the claim for the refund to satisfy himself that the amount is legitimate. Then the company had duly completed a refund claim form and submitted same to the Ghana Revenue Authority with all supporting documents. And where the Commissioner General is satisfied that a refund is due, the company, he is required to refund the money to the company within 30 days after receipt of the application. Where the Commissioner General fails to make a refund within the 30 days, he will be required to refund excess credits with an interest. So the state three condition that must be satisfied before a taxable person without a tax invoice may be allowed an input VAT or input tax deduction. So where taxable person does not have a tax invoice that provides evidence of the tax input paid, the Commissioner General may allow a deductible input tax in the tax period in which the deduction arises to a taxable person under certain conditions. So these are the conditions. Taxable person took all reasonable steps to acquire a tax invoice, and failure to acquire a tax invoice was not the fault of the taxable person. and where the amount of deductible input tax claimed by the taxable person is correct or verifiable. Then C, what are the contribution rates and how they are distributed between the employer and the employee under the three-tier scheme, right? So tier one, tier two mandatory, which is 5.5% for workers' basic salary, then employer contribute 13%. Total is going to be 18.5%. Out of the 18.5, employer remits 13.5 to the SNIT within 14 days, following the end of the month through the mandatory first year basic social security scheme. Again, out of the 13.5 paid to SNIT, 2.5% to NHIA for membership of health insurance, and then the residual 5% is sent to the mandatory second tier occupation scheme, which will be privately managed by trustees, approved and licensed by the board of NPRA. So tier three, this is a voluntary pension scheme also regulated by the NPRA. The amount to be contributed by the employee or the employer is not fixed. However, to qualify as a relief, the total amount contributed by the employee and or the employer should exceed 16.5% of the employee's basic salary. So question 6, our last and final. Hey, we have question 7 too. So meeting the threshold is a requirement for VAT registration. Others may come under voluntary registration. However, certain activities must be registered despite the above rules. Describe activities under VAT which do not acquire meeting the threshold rule before registering. Right, so these are the activities: a national, regional, local, or authority or body. Right, so the other person too is a promoter of public entertainment, and you can read this by yourself. Now B is asking for what constitutes supply of service under the VAT. So supply of service, which is not a supply of goods or money in the nature, includes the performance of service for another person, making available of a facility or advantage, or tolerating a situation or refraining from doing an activity. What is compulsory registration under the VAT? Under the types of VAT registration. So a person who is required to register or has met all the registration requirements but fails to apply for VAT registration shall be registered compulsorily by the Commissioner General. This is an enforcement measure by the Commissioner General. And then when they say we have to compute the pension, it's the same thing that we have been doing. The third, this one is asking us to compute the best distance and the pension monthly payment. So now the average year is 20 already, right? Because when we take the best, it's going to be still 20,000. And then the person worked for what, 408 months. We take the first 180, it is 37.5. And then the rest we multiply by 0.0935, like that. So now this question is asking us, what constitutes supply of goods and the supply of services? The supply of goods means an arrangement under which the owner of goods parts with the possession of goods by way of sale, barter, lease, transfer, exchange, gift, or similar disposition. Supply of goods does not include supply of money. The disposal of a taxable activity or part of a taxable activity that is capable of being operated separately as a going concern. Now, the supply of any form of power, heat, refrigeration, or ventilation is supply of goods. And supply of service is the means supply, which is in the nature of performance of service for another person, making available of a facility and tolerating situations and refraining from doing an activity. So a supply of service that is incidental to supply of is part of supply of goods. A supply of goods that is incidental to a supply of service is part of a service. A supply of service that is incidental to an import of good is part of import goods. So B is asking us of the cancellation of registration, where we explained this already, where the person no longer exists, it's not carrying on taxable activity, it's not keeping proper records, has no fixed place of business abode, is not required or entitled for registration, has not submitted regular tax returns, has not met the registration threshold. Right. So taxable supply, where we've explained this already. Then the rate here, so defined benefit and then defined contribution. Defined benefit scheme means a pension scheme providing a definite or a clear benefit. Under these schemes, the employees will, on retirement, receive a pension based on the length of service and salary, usually final salary, or an average of the last few, usually 3 years salary. Then the defined contribution are schemes which the employer undertakes to make certain contribution each year, usually a stated percentage of salary. These contributions are usually supplemented by contributions from the employee. The money is then invested on retirement and the employee gains the pension benefit that can be obtained. All right, so this ends our lesson for today. Make sure you like this video and also subscribe to the channel and also listen to my friends Jenny Music. Please kindly do that. Kindly do this for me for the love of the game. Thank you very much for your time and see you some other time. Bye.